Hello and welcome to another update video about Bitcoin. Bitcoin yesterday night or tonight reached the $21,900 level, the key resistance area. At the moment it's holding it nicely. It did get rejected but not too strongly. So it's still making higher highs and higher lows at the moment. We can see though on the 1 hour chart a pretty clear bearish divergence. So we need to be on high alert now for a move to the downside. We also see on the 4 hour chart how we are reducing bullish momentum. We don't really have a bearish divergence on the 4 hour chart, but we are just before potentially creating here a bearish crossover on the RSI. This has just happened actually even, but it's not clear enough as a signal for me to be, let's say, we need to be on high alert for a move down anyway. So be on high alert. It's a time to be very alert, I think. What I can tell you is one thing. A lot of people get bored in the current market and frustrated. But there is at the moment a lot of opportunity in this market. And also short term, I mean, the bullish scenario isn't dead. It isn't dead. We need to be careful not to suddenly jump on the train here and think it's definitely going to go up. But there is a lot of bullish potential still in this chart. It could play out bullish. I tried to let that come across in basically every video here since June, that even though my view has flipped a bit more bearish, because I do primarily now expect lower lows because of the invalidation of my key bullish wave pattern that we had, it is not dead. There is still a bullish pattern available as long as we stay above 17,600. It's the leading diagonal. Don't think it's a very likely one, but this could unfold into something much more bullish. So be on high alert for that. And I try to explain in this video how this would work, and I did that in the last videos as well. I always try to do it again and again to make sure that you understand it, because things can get complex with the Elliott waves. Obviously we're analyzing this from a shorter time frame. Overall, the bearish pattern here would suggest in a WXY pattern that we came down in a wave 1. Down here we expected at some point a recovery to the upside in a wave 2. That is exactly what is currently unfolding, and we would then expect next, primarily in yellow here, a move to the downside in a wave 3. But the wave 2 of course could extend further to the upside. It could extend further. How much? So we're looking here at the area around the 78.6% FIB level. I think in previous videos I said 23,600. I think it's more actually 23,800. I don't know if I measured it wrong or something, but in this case, this is a 78.6% FIB level. So if we get above that level, the bearish count will get less likely. It will get less likely. It's what it is, you know, because a wave 2 that extends more than the 78.6% FIB level is generally unlikely or less reliable. Also, there's the potential that the wave 2 is obviously finished here now at any time, but it could extend out further. It could extend in this ABC pattern. We talked about that. That would be frustrating. Yeah, it would be. But it's a possibility. You know, in this ABC pattern, we could say, all right, possibly we've only just in this wave 2 finished the wave A. We're now coming down next in a wave B. But the structure of the market should help us determine that. So I can also tell you which FIB level should hold for us to keep the wave B option realistic. So let's say we retrace now. Maybe we push up a bit higher, but whatever. Let's say we come down now. And then if we can hold, and that level changes because it depends on how high we go now. But if we can hold, yeah, ideally, I mean, again, a wave B can be very unpredictable, but let's say we come down, yeah, and we see a corrective structure and we can hold the 78.6% FIB level at 19,255, then we could expect another leg up here in a wave C. And this would be required, obviously, to stay below the 23,800 level. Yeah, so what you need to understand, let's say if we push here a bit higher, and this would be a wave A, then this will limit the space of how long wave C can go. And if we break above 23,800, it increases the likelihood for a much more bullish outcome. Maybe then we have to count this as a 1-2 and here wave 3 to the upside. So it really all depends on how low do we go in the next move down, and if it will be a corrective or an impulsive structure, because if it's impulsive, we will come down further. If we hold the 19,000, what did I say, 19,250 level, I think, yeah. We will go higher with a high likelihood in a wave C, and then how strong the wave C will be will determine if we might flip into a bullish scenario. We could even reduce the likelihood again of the bearish count if we break above 23,800. So that is a key level to watch out for. It just is what it is. For now, primarily what we expect is that this here is a wave 2. Ideally, we want to have it break down straight away to get a bit of clarity here in the chart. But you know that markets often are not that easy. And I always try to show you the moves that could happen to prepare you, because you know, this is the most straightforward view. Yeah, that we get the wave 1 here, the wave 2, in which we can count WXY. We could even make it work as an ABC in itself. But this is not always how the market works. The market tries to make things complex and tries to, especially in the current environment, Bitcoin tries to move the waves into their extremes. We've seen that with this decline here. This move down. Very strong. Wasn't really good for the bullish scenario, but also not strong enough to dismiss completely the bullish cases. So it really moved down to its extreme, and it might do it again, you know. So be ready here. This is a key, you could call it a key decision point, a key inflection point for Bitcoin. Sometimes it's just best to wait. Yeah, not every wave needs to be traded. I talked about that yesterday. We have more clarity if the market breaks above 23,600, absolutely. And also if the market breaks below the last low at 18,500. I mean, that would send Bitcoin down to 17,600 and probably will lead to a new low. So those are the levels where we will get clarity. The next move down could be a wave B. Be aware of that as well, which is often unpredictable. And in the short term here, there is a good chance that here we have now done what we need to do. So be on high alert for a move down. If we break above the 22,000 level, we would get back into the wedge here, the ascending wedge. Yeah, and then we have basically surpassed that 21,900 resistance level, and it could take us higher short term in this wave 2. So you can already see this is a massive structure that is developing here. And I get it's confusing, but that's unfortunately how the market is. So, you know, 21,900 is the key resistance point we talked about. It's also the 50-day moving average. So really a lot of resistance here. It's the ascending trend line resistance as well. And even the upper band of the daily Bollinger Band is sitting here. Now, if we push higher, first port of quarter 4, first next resistance level would be the 22,700 level, the 61.8% fib level. And if we go any higher, it is the 23,800 level, and a move above that would make us flip to more bullish. And again, the next wave down, the structure of that will help us determine the next bigger move. At the moment, we're just at a key inflection point, a key decision point here, and I'll keep you updated about what kind of structure I see in the market and how I see it. Primary expectation is still down, but it's time to be open, have an open mind. Absolutely. Okay, and that's my update about Bitcoin. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.